What's good, everybody? Today's gonna be a really short video, market recap, because I had a loss on Friday. But it's gonna be a very quick video because I'm trying to watch some Mr. Beast. As you can see, for me, price was. I'm just gonna show after I mark everything out. Each session. So yeah, I'm gonna have everything marked out next time, and then I'm gonna explain what I marked out and all that. So, because I lost, I knew that the bias was bearish for the day, but I seen a sweep of liquidity to the downside, so that's why I took a long, but then it just got stopped out. So, yeah, let's go. Alright, boys, I have everything marked out. I have the highs and lows marked out, hourly highs and lows, 4-hour highs and lows, session highs and lows. Basically, any prominent high time frame, high and low. And also, I marked out hourly fair value gaps. This one has been tested twice already. Reaction, or 3 times actually. This one's untouched. This is untouched. This one has been tested multiple times, and we're rejecting off of it, or reacting off of it. Going into the day, it looks like we're having. Well, I already knew this, but I say we're having bearish bias. But I was only saying that because I seen on the high time frame it was a downtrend. I seen a comment on TikTok where it was saying, how did you not see, like, not to me, but on another TikTok, it was saying, how did you not see the obvious respect of the 1-hour FVG? And here on both indexes, now I can see that. Respect to this fair value gap. Buck structure to the downside. Inverse this gap. Inverse this 1-hour gap before market even opened. We tap back into the middle point of this gap. Should have knew it was going to react. And this is the exact place. Around here is when I took a long. So I was just selling. We did the same thing on ES as well. Midpoint of the gap. Inverse this hourly gap after respecting this bearish gap. I was looking at this and I did mess up because I said, what did I say again? I said SMT here at the lows. Possible SMT. But I did not see that we reacted to this gap. So boom. Now I know my bias. Now I know everything about highs on the draws on liquidity. The fair value gaps. Knew that we're bearish, 4-hour bearish. So yeah, let me check on ES. Yep, bearish. Now I'm gonna pause, scale down on a lower time frame, see what happens at market open, see what happens at pre-market, and we'll see. Let's go ahead and do this, boys. Oh, and another thing that I should start doing is, I seen a guy on TikTok, he was also saying what draws on liquidity he wants to see get swept in the coming day. Since price is bearish and ES swept this low, I would be thinking NASDAQ is going to come down to these lows, sweep it, and then either react or come down to these external lows down here, sweep it, and then react. And then there's also these lows all over here, but not going to lie, I only marked it because price is already there. So if I just saw from here, from this 8:30 point line that I had, and it was like around 9 a.m. in the morning, right? If I was just looking at the charts, I would have said this was my draw on liquidity, that price might draw to, and then react off of. But it actually came all the way down here. So those would be the draws on liquidity that I would like to see get swept. And then I would like to see a reversal to the upside, which we have not gotten yet because the market closed right as we were going back up. And the week opening gap is all the way down here. Our price opened or closed. Wait, what? Price opened all the way down here, then after an hour closed all the way down here, sweeping all this liquidity. So yeah, so now I'll be looking for longs, but before I like to see these lows get swept. So now let's go ahead and look at low time frame on pre-market and then market open. See what I didn't see or see what went wrong. Let's go. And here we go. First thing I see whenever I go on a lower time frame is that we come back into equilibrium on this from this leg down into this 1 hour gap. So here I should have already been thinking if I see a reaction to the downside from this gap, and since we're inside equilibrium premium range right here, premium price range for perfect shorts, if I see a reaction off of that, I should be looking for shorts. Why? Selling, bro. I just went in without properly analyzing and shit. So let's go on a lower time frame even, because I would be mostly looking at the 15 and 5 minute after marking out hourly fair value gaps and all that. So boom, we look at what London did. London even sweep these lows. London swept these lows. So now we see it change in order flow to the upside. But then I should have went on the 15 minute, seen that it looks like we're just retracing into this hourly gap. Go back to the 5 minute. Oh shit. Put this at 8:30. So at pre-market, all we're doing is coming up and staying into this gap, sweeping this low time frame liquidity here. Boom. We even react to this, or same thing, you can also just say we react to this 5 minute gap. So at market open, I should have already seen, if I wasn't looking at this 1 hour gap, I should have been seeing this even, which I don't know how I wasn't seeing. Literally pre-market sweeps buy side liquidity, react to this 5 minute gap. If I don't want to look at the 1 hour gap, boom, break structure to the downside on the 5 minute, retrace into this 5 minute gap on the 5 minute, and as well as equilibrium here. So now, hold on, I'm gonna get rid of this equilibrium. Boom, 5 minute equilibrium here. I would actually be looking for the trade on ES, just because I prefer ES's calm movements more. So yeah, then after I see price returning back into this 5 minute gap, I should have scaled down to the 1 minute. Yeah, because market open was here. We literally just come down. I just keep forgetting that higher time frame holds higher power. I was looking at the 1 minute like, oh, break a structure, we're going up. No, 5 minutes, just a 5 minute retrace. Break a structure to the upside. Then we tap into this 5 minute gap that I was talking about. I react off of it. And once I see this, wait, let me mark out the 5 minute gap actually. Stop. Where am I at? Let's go to the 1 minute. Once we tap into this gap, where is it at? I would have actually just entered off of this reaction, because I always just wait for a bearish reaction to the gap. So let's see, I would have put my stop loss above the gap. So I would have actually almost got stopped out too. Dang, I actually would have got stopped out. Actually, let's go to the 5 minute. Okay, we're not gonna lie, I actually would have got stopped out anyways off of this move, because of how for my stop losses. I mean, I would have stayed in, if I took this trade, I would have stayed in if I put it at the high, but I didn't. So hold up. Realistically, I would have just put my take profit at this low, even though we have draws on liquidity all the way down here. So, yeah. So realistically, I would have got stopped out today for a not today. I would have got stopped out on Friday for a 3.14. Yeah, I would have got stopped out. Okay. Well, yeah, there's the quick little market analysis of what I should have done. Overall, I shouldn't be disappointed. All I did was not analyze for long enough, and I didn't see that we're retracing on the higher time frame to equilibrium as well as this gap. But yeah, boys, that's all. We sold this liquidity. So starting here now, from what I'm saying, I am saying that since we already sold all this external liquidity, we will now fill this new week opening gap. We will fill this new week opening gap. We will have a little retrace to the downside to maybe like an hourly fair value gap equilibrium. Some type of high time frame gap, like 15-minute gap, hourly gap, 4-hour gap, whatever, for tomorrow on Monday during New York session. And then we could be looking for a sweep of buy-side liquidity. And right here, we're actually getting a little retrace on the 5-minute during Asia session. Most likely going to react to it. If not, then we might actually just come down, sweep this liquidity again, and then not push to the upside. Actually, I shouldn't even be talking about what we're doing without any context. Let's go ahead and send off 1 minute. 1 minute, it looks like we're like entirely disrespecting this gap right now. But yeah, that's the end of the video. I'm gonna go ahead and post it, and we'll see what I can do tomorrow. Oh wait, I'm done. I'm an idiot. This was last year. Oh my god. This was last week's news. Friday, no news. Thursday, basically no news. Here's when we had a lot of news. That's when price was moving, just consolidating, I think. Tuesday wasn't that bad. Monday, I hit it. Like, I don't think I caught a trade on Monday, I think. Actually, I did. Wait. Yeah, I took a trade on Monday. I caught it. It was a dub. I just need to get a lot better, not cap. Alright, I'm done. I'm gonna just fix everything tomorrow. Hopefully I can catch a good trade. Get back in that zone. Because I've had like 3 losses in a row. So let's go.